A couple of weeks back, Malaysia's government slashed its heavy subsidies on fuel. That sent prices at the pump soaring 40%, but will help the government keep its deficit under control. Economists universally welcome the subsidy cut. The public and small business owners, not surprisingly, see it differently.
When the prices of oil goes up, people have less money, they eat less outside. My business is affected. It's just like that.
Across ASEAN in 2008, inflation is likely to hit levels not seen in years, in some cases decades.
The rising commodity costs, particularly oil, is putting inflationary pressure that has not yet made its way through the system. I mean, there is inflation in the pipeline that will tend to exacerbate the fiscal instability caused by the subprime crisis that originated in the U.S.
Still, countries like Malaysia and Indonesia, with rubber, palm oil and gas, minerals and timber, benefit overall from rising global commodity prices, as well as stronger ties within the Asian trading bloc.
Our position today is fairly strong. Our cooperation today is stronger than before. Our intra-East Asian trade has also improved. Even within ASEAN, intra-trade has really improved.
That point was underlined repeatedly at the World Economic Forum on East Asia.
We are seeing more and more increased mutual trade between Asian countries, which gives the stability not only within the region, but also to the entire world.
Booming demand from India and China particularly for commodities and other products will help shield the region from the impact of the US slowdown.
China is twice as large an economy as it was just 7 years ago, growing 10% per year. That means they double in 7 years. So whatever the situation was during the last global downturn with the dot-com bubble bursting, that it's just more balanced demand than ever before.
Take Malaysia. Its exports to the US slumped in the early part of this year. Overall, though, the country's exports rose 12% in the same period, with other Asian countries picking up much of the slack. It's an indication that the region's economies have, to an extent, decoupled from their reliance on the US. But the picture is a bit deceptive for the many ASEAN countries for whom electrical and electronics products are key exports.
What's happening is that the actual exports, instead of going straight to the US now, are actually going off to China to be assembled, and from China they're going back to the US as the final market.
Still, there's no doubting that countries in the region have diversified their markets and their engines for growth. In Malaysia, for instance, growth is being spurred by major government infrastructure projects, as well as solid consumer spending.
Indonesia, with a population of some 240 million, has a vast domestic economy to rely on, giving investors like the German pharmaceutical giant Bayer much to be positive about.
We are in a market segment which is really constantly growing. The company is growing double-digit over a couple of years already. So the prospects, the past and the prospects are pretty good.
Despite the combined impact of a US slowdown and rising inflation, economists expect ASEAN countries to average still highly respectable growth, between 5% and 6% this year. And ASEAN countries generally look much more resilient these days.
I think corporates now are much better structured to withstand any of these external shocks. So I'm optimistic.
For all the signs of the region's trade decoupling from the US, the same can't be said of ASEAN's financial markets, which have been rocked by the same bearish sentiment as Wall Street. It's a reminder that while it's a growing reality in Asia, decoupling can only go so far in an age of globalization.